Good morning, ladies and gentlemen. Welcome to Market Forecast, brought to you by Options University. This is Butch Shorak. It's Monday, March 17th. Happy St. Patrick's Day to you out there, 2014. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit. And as always, do not trade with money you cannot afford to lose. Looking at the index for the past week, let's take a look and see exactly where the Dow, where the NASDAQ, S&P 500, and the Russell 2000 came in for the week. Looking at the change for the week, we see all negative numbers as we saw a pullback in the market. Percentage change for the Dow, down 2.4% for the week, down 3.1% for the year to date. NASDAQ down 2.1%, still in positive numbers at 1.6% for the year. S&P 500 down 2%, barely into the red at 0.4%. And the Russell 2000 down 1.8% for the year, up 1.5%. As we see the market having difficulty breaking out into big new highs, which what should be the best 6 months of the year for the market. We really had enough run earlier in the year that things are not moving all that fast. As far as economic announcements for last week, we had a mixed breed. Employment numbers came in just fine, and when we looked at Friday's consumer sentiment, a bit of a disappointment, but that was not what moved the market, as it was time for the market to do what markets do, pull back and show us that the market is in control, and that it's our job to react to what we see. Looking at what's coming for the coming week, remember last week we had very little on Monday, Tuesday, Wednesday, and only the big announcements coming out on Thursday and Friday. This week we've got more coming out early in the week, as we have the Empire State Manufacturing Survey coming out at 8:30, industrial production at 9:15, housing market index coming out at 10 a.m. on a Monday, St. Patty's Day. FOMC meeting begins this week as we come to another round from the FOMC to see what they have to say and how they're going to boost the economy. CPI out at 8:30 and housing starts out at 8:30, so we've got announcements on Tuesday that certainly are capable of moving the market. Give us an idea of what the economy is doing, what the housing market is doing. On Wednesday, we have the FOMC announcement, which generally comes out at 2 o'clock, and that's when it always comes out, and we'll see what they have to say and what they're going to do with interest rates and buybacks and the things that the Fed has been doing to move the overall economy. Coming at Thursday, we have our weekly jobless claims coming out, which certainly have not been disappointing in any way, shape, or form as in quite some time. Philly Fed coming out at 10 o'clock, existing home sales coming out at 10 a.m., and economic leading indicators at 10 a.m., giving us ideas of what happened during the last quarter. And looking at Friday, which is quadruple witching day, which we know can be a bit of a crazy week, but it is recently in the last couple of years has been a positive move in the market during this week. As we look at the futures this morning, on Monday morning, we see the futures up 10 points prior to the market opening, and we'll see if that continues to hold as the morning opens, looking for that 9:30 Eastern opening out of the indexes. Let's take a look at the indexes and see what the charts look like. You're looking at the 3-month of the SPX. We see that. If we look at the overall move, we're still with the 30 above the 50 above the 200. And we'll see how long this holds, as we had a cross last week, and we see that we're still in that upward trend. Doing what markets do, they expand and they contract, and we see that we were not quite down to the 30 or the 50-day moving average in the SPX. Looking at a closer look at the SPX to see exactly what happened. Looking at the last 5 days, we see we topped out after a bit of a move up where we expanded. We consolidated at that level, and now we're pulling back to the average. Remember, all things return to the mean, and that's exactly what we're seeing happen with the SPX. Again, still above the 30, 50, and the 200-day moving average. Dow, which has been a bit of a laggard, as we saw, down for the year, and has had a difficult time breaking into positive numbers for the year. And as we look at the Dow, we see that it's sitting right at the 50-day moving average. I'm sorry, that's the 30-day moving average, as we haven't got that crossover back up on the Dow. And so closing at 16,000, we see whether we're going to get a bounce, and it looks like, or looking at the futures, like we certainly could get a bounce this morning. That Dow certainly trailing a bit some of the strength shown to us by the NASDAQ, the Russell, and the SPX. Looking at the NASDAQ, well, we see again we had a pullback, again 30 above the 50, above the 200. Bullish market continues on up, and we see we're sitting right at that 30-day moving average, and we're looking at a bounce potentially for this week. So we'll see what the NASDAQ does, as this is just what markets do. They oscillate up and down, and it's our job to react to that oscillation. Russell 2000 has not even pulled back to the 30-50 day moving average. We did have the cross take place there, where the 30 is above the 50 by a very small margin. We'll see whether we get a bounce out of the Russell, as we have what looks like a strong opening in the futures. And what kind of movements do we see out of the VIX? Well, when we see pullbacks, what do we expect to do? We expect to see the VIX pull back, or to expand, as it is a contrarian indicator, telling us that as the market pulls back, there always is a bit more stress in the market, and this is a measure of that stress. Let's take a look at some of the sectors and see what sectors did as the market had a pullback for that week. And so first thing we'll take a look at is we'll look at the bond market. Looking at the bond market for from December till now, the last 3 months, we see that we're sitting again at resistance for the bond market. And if we keep having a further pullback, we could possibly see some expansion out of the bond market. But looking at TLT or ETF for the bonds, we see that basically sitting at resistance, and we'll see whether we get a pullback as the market rebounds some off of that pullback in the major markets. Looking at gold, our safe haven, let's see what happened. Oh, look at that. We got a breakout this week, as there was a movement to gold, and so it looks like we're seeing some kind of movement forward in gold prices, paring away at that what was a 25% pullback in gold for the year. Next, taking a look at the spider, here we had a pullback. What kind of volume did we get? Well, we were doing about average volume on Monday, Tuesday, and Wednesday, and as Thursday and Friday came along, giving us a greater pullback, we saw an increase in volume, as we may have an expectation. Look at, we got the beginning of what could be a doji there. Watch for a break above this as we see if we get our next bounce or not out of the spider. But the last 2 days certainly had some volume associated with the sell-off. All right, fine. Let's look at the financials and see what you would expect. What would you expect to happen with the financials as the market pulls back? Well, the financials basically, in a healthy market, follow the Dow, and we'll see if that's exactly what happened. Looking at the financials, we see that the last 5 days, a bit of a pullback, pulling back to those moving averages. Remember, all things return to the mean. So far, no big change in what we have is a bull market, just having a little bit more difficult moving up as we started the year very near the all-time highs, and we've been getting new highs as time has gone by. Just not moving up at the same pace that we did in 2013. Finally, looking at USO, our ETF for oil, let's see what oil did during all this, and we had an expansion out of oil, and during this week, we had a pullback as we pulled back to that $35 level in USO and then consolidated the last 3 days. So oil not showing us any great strength as the market pulled back. For those of you that are gold members, stick around for our stocks to watch. Let's see which stocks are setting up for you bulls as we had this pullback, and show which of our stocks show us the greatest strength as the market pulled back. For those of you that would like to see more free videos, you're welcome to go to www.optionsuniversity.com/free gold. So with that thought, it is a happy St. Patrick's Day. Behave yourself today. And this is Market Forecast brought to you by Options University. This is Butch Shorek. It's Monday, March 17th, 2014. And we'll see you next week. Gold members, stick around.